Hello everybody, this is Professor Hassey. This is our Accounting 203 week number 3 introduction video. The date is Wednesday, June 24th, and this is for our Thursday class, June 25th at 6 p.m. And as you could see by the agenda, we have a full plate. We're going to be completing our work with chapters 3 and 4 of the accounting cycle. We're going to be introducing this next week student student meetings. I've posted a schedule to the discussion forum, and I'm going to spend 5 to 10 minutes with every student this coming week. Beginning on Saturday, you select a time, and you will meet me, and we'll go over the course. Any questions or concerns you have. This is Student Meeting the Professor Week in Accounting 203. We also have quiz number 1, which is due today, June 24th, tonight. So you are going to be completing that this evening. And then we have another quiz next week as well on chapters 3 and 4. So that's going to be a lot on our plate this coming week as the pace picks up a little bit in our class. So let me just show you a refresher video of the accounting cycle.
So now that we've learned how to do journal entries, we learned about making a trial balance, we learned about how we make adjusting entries after that trial balance. We make adjusting journal entries, and then we have an adjusted trial balance. Ultimately, we have some financial statements, we have some closing entries, and then we can reverse some things that we made mistakes with. So I think it'd be good we just go through and just kind of go through the process, this cycle, and just talk just to make sure you understand exactly what's going to take place at the firm of how a transaction ultimately is recorded by a company. So first off, it all starts with the journal entry, right? You've got some kind of transaction, you make an entry for it, and it's recorded. That's how it initially comes into existence, so to speak, from a financial perspective. Then ultimately you post it to a ledger. Now for different firms, that might be different things. In the old days, there was a really big ledger, right? Some big sheet of paper that had there was a book that it was in, and you go to that ledger and you ultimately update these things over time. For your firm today, it might be Excel is your ledger, or maybe QuickBooks or something like that. Ultimately, you make the journal entries, and then you need to post them somewhere, right? So your key is, it doesn't really matter what the format of the ledger is, that you're posting this entry to some kind of master account or some kind of master file. And then after that, remember, you create the trial balance where you're basically saying, okay, what are the totals, of accounts receivable and all these things, and you've got the 2 columns, you've got the debits, and then you got the credits, and you just want to see that they balance. You want to see that they're equal to each other. That was kind of the purpose of the trial balance, is to see that things balance. And then after you've got the trial balance together, you go ahead and you make adjusting journal entries. Remember, we talked about that some things over time, they expire or they get used up, right? You might say, okay, well, I looked and the supplies have been used and we weren't really making journal entries regularly for that, or there was some interest expense or revenue. And you go ahead and you make these adjusting journal entries, these AGEs. You go ahead and you make these, and then after you've done that, you're in a position to create an adjusted trial balance that now reflects the adjusting journal entries. And then after you have done that, then you go ahead and you start putting together some financial statements, some things we haven't talked about yet, the income statement, the balance sheet, the statement of cash flows, things we're going to get to in other videos, but you can put those together once you have an adjusted trial balance. And then the very end of the period, what you're ultimately doing after you've had the financial statements, after you've done all that, you close out those temporary accounts, right? The revenue, the expenses, the dividends. Remember, those things they just exist for a certain period, right? For a year, a quarter, but then we close them out to retained earnings, ultimately through that income summary account. But ultimately, these things get closed out and they end up going to retained earnings, which is a permanent account. And then after you've done the closing entries, then you can go ahead and say, okay, well, let's put together a post-closing trial balance. And again, as always, want to make sure that our debits equal our credits. And if they don't, then we know that we made some kind of mistake along the way. And then optionally, at the beginning of the next period, If we realize that we made some kind of mistake, maybe we shouldn't have made an adjusting journal entry, one of those entries up here, we said we shouldn't have done that, we actually found the supplies or that we thought we had used or whatever, you can go ahead and you just reverse an entry, right? You just flip it. If you credited the supplies before, you debit it, and then vice versa for the corresponding entry. You just basically flip the entry, and that undoes the effect of any kind of mistaken entry that you basically wanted to undo.
Eric, why do so...
Okay, as you can see, that's just a review of the accounting cycle, and we'll complete that review tomorrow night in our week 3 class at 6 o'clock. Doing the adjusting entries, refreshing that, looking at the adjusted trial balance, financial statements, and the closing entries for our accounting. So that's what we are going to be practicing in quiz number 2 this week. And if you have any concerns or questions about that, come prepared for class tomorrow night, and we'll go over them. And then we'll also get prepared and sign up for a professor interview. Again, I keep saying interviews. That's awful. It's not an interview. It's a professor meeting for the beginning on Saturday into next week, where we can talk about any questions or concerns you have with our course. So thanks, everybody. Look forward to seeing you all tomorrow evening. Have a good day, and we'll see you tomorrow night.